Welcome traders, and this is Wolf of Wall Street. And today we're gonna go ahead and give you guys everything that you need to know right now. This is actually a recording for my traders and for the people that will be watching this video right now and for the future. So that when people just start joining into the new chat, we're able to educate them and give them a good insight of how to trade the Forex market. Thank you so much for joining us today. I really appreciate your time that you're taking today. You're definitely going to be blown away today. I have some really good material that I want to give you. Just to show you, just to give you a quick recap of what we've taken a look at in the last couple days. We had a trade about was it yesterday? We had a trade that I saw a pattern, and it happened to do its job, and we're still in profits until today. And this one is still working. We still are working our way up to creating this consolidation area, so that we are able to work with our impulse to the upside. Same thing repeating history, but and it's working out very well. We're waiting for this to retest before it takes movement to the upside. Very, very, very good trade that we called out, and we're just waiting for that retest, and for them to take the long position to the upside. And when we do, it's just gonna triple and quadruple your accounts. Whether you're using, you're gonna be using. First of all, what you're gonna want to do first is you want to get yourself a nice little demo account. Get yourself a demo account from TradersView.com and plug it into your phone with MetaTrader. Soon I will be doing a video with MetaTrader on the phone. That way you're able to see what it looks like on your phone, so that you're able to see what happens on the laptop and what happens on the phone. But I want to focus mostly on the laptop, because you're going to be using the laptop a little bit more. And what I like to first thing you need to remember, and this is what you're gonna learn today, is that I want you to forget everything that you think you know about the Forex market. I want you to forget everything, all the methods, everything that you have learned, all the basics, everything. I want you to forget everything, and I want you to focus. And I want you. It's gonna take you a little time, but if you really push through it, you will be really successful. I guarantee you will be successful. And I know my lawyer friends tell me not to say to guarantee you things, but I know what works and what doesn't work, and I know for a fact that this is gonna work for you, especially if you do not have because everyone is different. Everyone's knowledge, everyone's brain is different, and it's wired differently. So when you grab this knowledge, I want you to just, if you need to go back again and take a look at it, that will be great. And this is a video for you exclusively, and I just want you to feel welcome. And second thing is that if you're going inside if you're going to start a career with the Forex industry, great. I'm more than happy to have to teach you. I'm here to teach you guys. I had a quick little journey that I soon enough I will release some of the things that I went through to get to where I'm at right now, to give you the information that you need today. And that's one thing that my mentor taught me, is that when you acquire knowledge, if you could have the power to help others, you have the obligation to do so, and to give that to the people and give that to you. And I've become very selfish, and I don't want to do that anymore. I want to be able to surround myself with people that need help, and I'm here to help them as much as I can. But let's go ahead and get started. What you want to do first is the very first thing that you want to do is you want to go ahead and go to tradersview.com and get yourself a nice little account. Sign up for a nice free account. This is actually for free. I haven't paid for a membership here because unfortunately I don't have to. I can just pull out any chart that I want, and I'll give you the little trick so you don't have to spend money on a working tool that you really don't need to pay money for. You're not gonna need indicators. Definitely, you're gonna forget about indicators. What you want to do is forget that we're gonna use anything basic. We're not gonna use none of indicators. Nothing. And it's just I'm gonna give you pure theory and pure science. And if that's what we're gonna do, it's what we're gonna do. And I'm gonna do that here for you today. And what we're gonna do is we're gonna go ahead and get to the concept of it first. Okay, this is the theory of it. And if you watched the previous videos before, you might have not understood, but that's okay, because we're here to make sure that we understand. If you can grasp this concept, then you can grasp the concept of everything that how to trade forex. First thing, the myth is that first thing is that you need to understand is that no one in this market has an edge. No one has an edge. No one knows what's really going to happen. No one really has an advantage. Only the big players have the advantage, because those are the people that drive these markets. Now, the way they trade is a very different way that they trade this methodology of trading. Luckily, we're able to spot these moves, these transactions that they do immediately, because the way they do is that when they put out a transaction, a pattern is created, or a wave theory, okay, is what we call it. We can call it that. Wave theory has a pattern. It's never changed. This goes back before Elliott wave. Before Elliott wave, or Elliott did his work with Elliott waves and how to identify waves in the market. Now, I'm not going to be teaching you Elliott waves here. If you want to learn about Elliott waves, you can get yourself a free book on elliottwaves.com and read it. Okay, I'm not going to teach you that, but I am going to teach you the methodology so you can start practicing. What you want to do is here's the concept that you want to have in your head always, and never break this rule. Never break the rules, because we have rules, and those rules are never broken. Remember, if you break the rules, if you make your own rules, then you're lost already. You lost the concept. You have to be able to tell yourself and be really focused to tell yourself, this is the way it is. If it doesn't look this way, don't worry. The pattern is not valid. Just don't worry about it. I will show you what the pattern looks like and what you need to look for in order to be successful at trading. Now, here's how wave theory works, and I want you to really watch this. Okay, pay attention. Okay, now here's how the theory works. The market moves in waves. Okay, I want you to understand that it moves in waves. Now, the way the market works is that when the market moves, let me move that. Okay, when the market moves, what it does, it creates impulses. Now write that down if you have a pen or a paper, or write it down in your head, or remember it. The market has moves in waves. That's never changed. Okay, that's never changed. If you take a look at a graph inside any graph, any type, whatever graph you may see, okay, the market moves in waves. Now you can see that here. Unfortunately, since we have the data is displayed with candlesticks, we're able to see the waves very differently. But those are waves in theory. Okay, now remember, the waves, the market moves in waves. Okay, now there's two ways that the market moves that categorize these waves. One, it will do what we call an impulse. Okay, these are what we call impulses right there. Okay, these are impulses right here. Okay, now if the market decided to move to the upside, it will have impulses, as well as if it decided to move to the downside, it will have impulses. Very big sharp moves. Okay, very sharp moves like this. Now if the market, the second thing that categorizes a wave in theory is consolidation. Okay, consolidation is what we called our correction legs. Okay, this is a correction and then an impulse. Okay, we have correction, okay, correction and impulse. Okay, remember, the market, again, just remember this is very key. This is the key concept of everything. The market has corrections and impulses. Okay, now what is corrections? Okay, corrections meaning it could consolidate, meaning the market will fake out. This is the area of the fake outs. Everything, everywhere, all the average traders, this is where they trade. This is the area they like to trade, especially because this area is the area of collecting money from other traders and losing trades in order for it to collect enough money for it to move very sharp. Okay, so the area of collection or correction or whatever, this is the area. Now typically, okay, these areas, when you spot these areas, you know exactly what's going to happen next. But the only thing that you don't know, okay, this is the only thing that you don't know, and I'm gonna give you the key to tell you what to expect. Okay, the market will have to collect enough money to make that move. Now it's okay, you have a sense of direction. First thing you have is a sense of direction. Okay, because if the market has the impulse, correction, and impulse, that's the only thing that market does. It's correct, it's impulse, correct, and move and do the other impulse. Those are the three characteristics that the market does. Okay, now correction, right there. Okay, very key right here, because this is where a lot of people, this is where most the retail traders fall for. Okay, do not fall for this area. Don't fall. Don't worry about this area right now. Okay, so let's take a look. I'm gonna show you what it looks like. Okay, this is the first thing that you need to take a look at. First off, when you're doing trading, you need to understand that the market, okay, the market has an impulse, right? Now within this area, it has impulses and corrections, and this is really the area where the area of Elliott wave and Elliott waves are created. Okay, this is the area of corrections, so these are what we call the Elliott wave zones. Okay, now remember, the market has very different time frames. So if you take a look at a daily chart, it does look a little different. Look at that. Now it looks a lot different than this area, right? So I'm going to show you what it looks like. Here's what it looks like. This is what we call our impulse leg right here. Okay, that's our impulse leg right there. Now you're gonna look around, and what you want to see is that the market has a consolidation flat area, consolidating, collecting money from traders that are indecisive, getting all these stops out, everything before it makes that big sharp move. Now this is very key, because if you take a look at this on a weekly chart, look at that. Okay, you have the impulse. I'm going to show you again. Okay, I'm going to show you what it looks like. You have your impulse leg right there. Then you have collection right here. Right there. Collection, impulse. Correction, impulse. You see that? Impulse, correction, impulse. And we can do this all day. Look at this. I'm going to show you, and you can't disprove that this theory does not work. Okay, we didn't have to use any indicators. Look at that. Now here's the difficult part that it might come to a lot of people, is that they don't know how to identify the impulse. The impulse is a very sharp move, like this. Sharp move, sharp move, sharp move, sharp move. Okay, very big candles. Those are impulses. Now let's say you go to the weekly chart, which you want to do first. Then you go to the daily chart. You take a look at it. You say, okay, Ray, well, I have an impulse here. I have a very sharp move, and it's okay if you miss this. You won't be able to, if you really look at if you work on your graph and you identify the previous impulse and the correction, you're easily able to identify the impulse and the correction. So it's okay that you missed this. Okay, don't worry about it, because it still has to do that final move again. Okay, you're never left out. You remember this. You're never left out of the trade. The trade has only begun. It allows traders to show them this map, then fake out everyone else that thinks that the market will correct itself and move to the upside. Psychologically, your brain tends to think that the market will continue to move up, and it doesn't. So what is it doing right now? And I'm going to show you. Look, this is an impulse, right? This is an impulse leg. This is a correction. Now, if you take a look at this, there's also a correction here. The correction within the correction too. Look at that. Very sharp move here as well. You see that? So what is it doing now? It's collecting here. Okay, hold on. It's collecting all this here, this area right here. In order for it to move to the downside. See that? So we're just kind of waiting for this move to retest up here before it makes the sharp move. Now it's okay. It's okay to you have to practice this, because if you don't practice this, then you won't be able to get the concept. There's no indicators that will give you that will give you this. There's no way you could get an indicator that will give you the true indication of the collection and the impulse. It's impossible. That's why you're more you're more important than an indicator. Your brain is more important than an indicator. Your judgment is more important than an indicator. So forget about indicators, okay? Remember, even the trend lines here are not your indicators as well. Forget about the trend lines. You're only using the trend lines to draw out the pattern only for that only reason, okay? The trend lines could, it could break and make a higher point right here, and all you have to do is readjust it. But you know for a fact that this is a correction move before it makes the impulse, the final impulse, the second impulse. So you got yourself the first impulse, the correction, and then the movement, sharp movement to the downside. Now you're gonna have a lot of debates, but that's okay. Now let's take a look at it. I went over to the 4-hour chart. As you can see, you see this, the impulse leg, the correction here. So what I want to do is, how do you trade this? Okay, so how do you let's say, okay, you're asking, okay, Ray, well, I'm not, it's gonna take me months for me to wait for this trade, right? Of course, it's gonna take months, but you know exactly what's gonna happen. You already know what's gonna happen. Okay, now because we want to make money fast, and I understand that, and we can do that, but you got to be really careful, okay? You got to be really sharp on what you do, and I'm going to show you what you want to do first. And you can go to the 4-hour chart. You can take a look at this, okay? Now pay attention. All right. If you look at this video and you look at the graph, take a look at the graph and see that we have a sharp move to the downside here. We have correction, and then we have another sharp move to the bottom. Okay? Then we have retest. Okay, we have to make low. We have to structurize this triangle. We have to structurize this correction. Okay, we have to let traders know that this is a correction. We have to be able to take out all the traders that have all this profit or whatever. We have to be able to take these traders out. We have to collect money. So you want to be on the right side of the trade every night, because once this breaks out, you can sell for days, you can sell for months, and you're still going to be in profit. Okay, so here's what we did. Okay, here's how we started. Now we have to make a sharp move to make the first high, which is the B leg. Okay, we have to make the A from the A. Okay, from the A, that sharp move, that the impulse was finished. Okay, then we have that retest here. Perfect, right? Now we have to look for a B side. So what it does is, we're looking to get inside the market on a daily chart, okay, and an hour chart. And I'm going to show you how that looks. Okay, let's take a look at a scenario. This was actually 2 days ago. Okay, 4 or 5 days ago. And what's happening here is there was a very sharp move, but this is what we call this. Just like I said, it's called an impulse leg. So that was an impulse leg, and I identified that as an impulse leg. This was the correction, and then again it did an impulse. Okay, let's take a look at another scenario. You could have saw this impulse, and you would have freaked out. And you would have probably bought. Don't do that. Okay, wait for this to finish. Okay, wait for this impulse to finish. You're gonna get an opportunity to get inside the market. All you have to be is just have to be patient and smart. Play it smart. Don't play it dumb. Okay, and then you have to figure out when it's collecting. Now you already know exactly where the market's going. It's not gonna go down here. The pattern, the upsending pattern, or the impulse told you that this movement was gonna do the second impulse to finish up the move. So what did it do? It collected overnight. It could take a day, it could take half a day, or it could take overnight. But I'm telling you, you're gonna see the results. So what it did, it collected this little small area of collection before it did what it did. Now remember, don't get inside the market when it's structuring the little triangle, okay? What you can do is you can set a buy side, you can set up a buy at the very low. When this becomes really low, you can start buying, because this is a sharp move. It's gonna take a couple hours. It's gonna take 1, 2, 3, 4. It could take about 5, 6, 7, 8 hours for it to move to what it's supposed to do. So what you want to do is you want to wait for it to retest the low, the very low of it. Okay, get to the low and buy it. Okay, and it will take rep to the upside. Okay, now you're wondering, well, Ray, how do I get out? Okay, in this small trade, this is a small trade. This is not a long-term trade. This is a small trade. The daily chart is your long-term trade. Okay, this is where we're gonna sell up here. Okay, at some point we're gonna sell up here. But right for now is your day trading. Okay, what you do is this was the 31st, and then it became the 1st right here, and then the 2nd. So you're in profits for 2 days or 3 days, all day. Now remember, this is what it's gonna do. Yeah, and you can use your Fibonacci to give you an indication on what it's gonna do. What you want to do is measure out this little small move from the low. If it's gonna go up to the upside, you want to put the 0 at the bottom, and then you want to put the 100 here in this area, at the impulse leg. The impulse leg is very important. Now what you want to do is you want to set your stop. Okay, if you're gonna enter this market and wait for that low, okay, if you're gonna buy, what you want to do is you want to go ahead and set your stop below or here at the 618. Okay, and you don't know if it's gonna continue collecting right here and then go and make that sharp move. But that's what you want to do, is you want to set it right below here to give it enough room to fake out all the moving average people, all the support and resistance people, the ones that are seeing, oh, we have a support right here. Okay, we have a resistance right up here, support. We're gonna sell this and sell it at the bottom right here, right down here. Okay, it's gonna take out all these traders. It's got to take them out. Okay. Now, when that happens, it triggers the movement, and so it triggers the losing traders, and it triggers the movement of losing traders, and it gives it more power. So therefore, you're in the right direction of the market when it's happening. Again, that's what you can do. How do you set up your stop and at a day trade? Well, you can do this. You can set it at 127. You take profit there, or you can set it at 141. Okay, every time. Or if you want to be a really risky trader, you can set it at 161 or in the middle of 161. But that's exactly what you want to do. Okay, first thing, that's what you want to do. Now you're like, okay, well, how do I identify the other move to the downside? Okay, so this is what's gonna happen. You're gonna get inside this trade on the buy side, right? This is an impulse to the upside. So how do you place your stop sign? Well, we said that we were gonna set the stop sign down here, and then when we go back again, we're the next day or whatever, and then you're seeing it, doing this. So what you want to do is, because the pattern is so valid, that you want to do is you want to end up, if it comes down, you break even. What it means is that you enter here and you protect a little bit of profit, and that's okay. That's okay, because what we don't want to do is you want to enter this trade and you want it to be a valid pattern. Don't blame yourself for the pattern not being valid. It's always valid. 90% of the time is always valid. So after that, when you start seeing this, Okay, when you start seeing this, when you start seeing the sharp move, if the market's right up here, then you can move your stop sign, your stop loss right there. Okay, then you protected all this. That's how you manage your trades. Manage your trades. If it keeps continuing, then move your stop sign, because this can continue to move up. What you want to do is you want to save this chunk that you already won. Okay, that's how you move stop signs or stop losses on these types of trades. Okay, now you're gonna get one of those nights where you're gonna be like, no, this is gonna be a sell, this is gonna be a sell. Okay, well, you already set your stop. Okay, you set your stop below here, and you managed to lose this. But if in reality, if you would have done the right thing, then you would have probably won more than that. Okay, so remember that. Just remember, this is what you're looking for. This is the patterns that you're looking for. Okay, now we're gonna take a look at a downside movement again. I'm gonna do several examples so you can take a look at this. Okay, now you gotta look for an impulse leg, right? Okay, we have these are daily impulses. So you got yourself an impulse here, and that's great. That's what you want. That's what you want to see. You want to see those sharp moves. Okay, hold on. From here to here, and then you want to see that sharp move right there. Okay, the collection area right there, and then you get to see the impulse right there. That's a small trade, and like I said, you can use the Fibonacci right there. Use it as an indication right there. Look at that. You'll always end up on the winning side. You see that? 127, 141. Okay, just measure the impulse leg. Okay, again, same thing. If you miss this trade, that's okay. It's gonna do that right there. You missed a trade there, but that's okay because you already know what's gonna happen. You got a correction. And then you got the impulse again. Okay, you got yourself an impulse, a correction, okay, and then impulse. Now the patterns are not always as good looking as you think they are. It's only because it's what happens is that the market is not perfect. The market does not give you beautiful patterns sometimes, and sometimes you get 90% of the time you get beautiful patterns. Look at this pattern right here. Impulse, correction, and then the impulse. I'm gonna prove it to you. You did grab the impulse, right? See that? 161, 141 retracement. Right there. That's all you got to do. All of it. That's all you got to do. Look at this. The impulse, correction, and movement to the upside. Okay? Now, my mentor can argue that he doesn't use Fibonacci, and that's okay. But I like to use Fibonacci. Why? Because look, it's going to give me an indication of where it's going. Okay, so I'm looking for it to move right up here. If I hold my trade should come up right up in here. Okay, and we can record this. And I'm going to show it to you. When you take a look at this, I'm going to send you a photo, and it's going to either hit one of these. It's already going to the 127. So what I did earlier, I moved my stop right up there. My stop loss was right down here, but I already know exactly where the right side of the market is, only because look, it's taking out all these traders. Look at that small correction right there. If you take a look at it at a 30-minute chart, correction here, impulse, correction, impulse, correction, impulse. Okay, Look at this. Impulse, correction, impulse. Impulse, correction, impulse. Okay? Hold on. Okay, now you're like, all right, look at all these patterns. Well, this is how you're supposed to trade. And when you get these big patterns, oh my God, you're definitely gonna be tripling or making good money here. Look at impulse, correction, right there. And I'm gonna prove to you again, right there. Where's that 127? That 141? Right there. You see that? It even went up to 161. You just had to wait a couple of days. You had to wait about a week for it to come up here. And that's how we trade. We move, we see the impulse, we see the correction. We gotta wait for the low to structure out the very low, the very support of this support. And then we're taking a look at, we're looking to get inside the buy side. We're getting inside the middle area here, or we're looking to get inside at the very low. We don't want to get on a sell side. Never get in a sell side. Never get on a sell side on a small correction that is moving to that is moving down or up. I'm sorry, that is moving to the upside. So if we have a big correction that is moving up, and you're working in here just to get a couple hundred pips, 200 or 300 pips, just to make the day, then don't just get in just like that. Remember, just if the pattern is solid, pattern in here with this correction, then get in. Okay, I'm not telling you not to get in, just get in, but get in and you already know what to do, exactly what to do. Okay, here's what I did. So what I did is 1, 2, 3. Okay, we had consolidation here for about 1, 2, 3 days. And that's what you want to do. Wait it out. Wait it out. You're just waiting for that shoot. And then now I place my buy side there. Place my my stop loss below 618. And what I did is I placed my profit area at the 127, possible 127. And especially because this was such a big move that I expected it to be the same size as this. So if you want to really get to see how much it is, okay, what you want to do is, if you don't want to use the Fibonacci, okay, if you don't know how to use, or you're confused how to use it, then just place it here. Just move it to the side and do that, and then decide whether you want to take profit here, or take profit here. But it's about the same amount of the impulse and the correction. I'm sorry, the second impulse. So they're the same size. They're the same size. Okay, we measure out is the same size. Same size here and same size there. Okay. Now look at this. Now look at this. So if I was working my way up and I saw this pattern again, and it was a move to the upside, I saw the pattern. I'm not gonna move my stop sign, my stop loss right here. I'm just gonna move it right there. And I saw it, and I was waiting for it to collect all the bad traders. And what did I do? When it did the sharp move, I moved it above that right there. And then I waited, saw it coming up to that 618, and then I was like, okay, I'm gonna move it up just a little more, because then I know exactly what's gonna happen. It's gonna come down. Okay. Look at that. Okay, if you don't want to use Fibonacci, that's okay, but don't confuse yourself. It's easy. I'll show you again, and I'm going to show you the downside patterns. Look at that. One, that's the impulse, impulse to the downside, and then we got the correction, and then we got the impulse right there. You see that? Impulse, like, whatever. Again, That's what you want to do. That's how you want to trade. You want to be ahead of everyone. You want to be ahead because they're doing these transactions and other people are waiting for other things, and that's not what you want to do. You see that? A little pattern right there. Look at that. And then waiting for that sharp move. See how it's the same thing repeatedly every time, every single time. Damn. I want you to go and practice this. I want you to just draw out the patterns and send me a copy and I'll take a look at it. And that's what you want to practice right now. What you want to do is go ahead and go on a graph and start practicing this. So go to the daily time frame, okay, or specifically go to the weekly, find the sharp move, find the impulse, and then the correction and the impulse. Then you want to go to the daily chart. Look at this. Don't worry about the A, B, C, D, okay? Worry about I'll show you how to do that later, okay? But I want you to get familiar with the impulse, the correction, and then the impulse, okay? Then go to the 4-hour time frame, okay? And then go and take a look at it, look at it, and look at that. Right now, I'm just waiting for this movement to move up, and it's gonna continue going up. And most of the traders, what they're doing now is, what are they doing? They're selling. Look at this. Majority of all traders are selling where they should be buying, where it's gonna retest this high, make the pattern. So the pattern was, it was again a sharp move, correction, correction, and then bam. There you go, right there. And it's just gonna continue to move up. It could take a week. I don't care. But the money that I'm making now is beyond what you might believe. That my accounts are doubling. The accounts are doubling, and this is real facts. If I did get stopped out, it's because I didn't move I didn't have a target price. And if you don't have a target, here, use the Fibonacci to give you an indication of where to set your take profits. This is a small trade. Remember, this is not a long-term trade. You want to use it as a short-time trade. Okay, short-time trades. These are short-time trades. These are not long-term trades. Okay. I like to. Right now, I'm looking at the British pound, and I love it because it does the patterns so beautifully. They're just so magical. They just show up, and you instantly know what to do. Okay, go to practice at the British pound. Take a look at another graph. You see this? Okay, so what is it doing right now? It's doing a collective. What is it going to do next? It's going to collect all these trades before continues to go up. It's going to continue. Maybe we do another retest. Who knows? It's going to do another retest. But when that happens, you see that? It's going to continue to go up. I'll put money on that. I can show you. Let's see right there, like that. So it might, and it's going to move maybe right up on that 141. Okay, and that's exactly what it's gonna do. Look at that. You can take a look at this at a 30-minute chart. It's just collecting more money. And I'm gonna publish this trade later on. I'm gonna show everybody how to do it. But this is what my mentor taught me, and I'm very grateful that I was able to find this information, thanks to him. So guys, practice this, and you will become successful. Let's take a look at another one. Okay, look at that. Okay. What's it doing? Okay, we had a consolidation, and what are we waiting for? Waiting for this to happen. Oil and AUD USD is going to continue to go up. It's just consolidating. Look at this. It's just consolidating right now. Look at that. So we're waiting for a sharp move, and I'm gonna get inside this trade pretty soon today, where I'm gonna get inside and I'm gonna place my take profit there, my stop loss below here, and I'm gonna catch, let's see, how much money am I gonna catch here? I'll show you how much money I'm gonna catch. Price range. Okay, I'm gonna get inside here. I'm gonna catch roughly about 1,152 pips, and my losing could be running about maybe below that right there. I'm losing about 500, 600 pips. Okay, but that's a trade I can manage. I can manage this trade because I know what the pattern is doing. And if I place, let's say I place my stop loss right there, and it's good. I can do that. I can shorten my trades. So I'm losing, let's say I'm really losing 300 pips, and I'm winning 1,000 pips. Okay, and this is gonna take this could take a month to get up here, but it's gonna do it. It's gonna do it. We can take a look at it again and again. Collecting, moving up. You see that? Collecting. See, sharp move, collection, movement. Collecting, correction, sharp move. Okay. Damn. I'm so proud of myself. Anyway, yeah, so this is Wolf of Wall Street, and if you have questions, go ahead and hit me up, and we'll go ahead and discuss this again. But this should have been a great video for you. Now, I wish you the best of luck, and that you're able to send me a copy of whatever chart you're doing, so I can know that you're doing it right. And thank you for watching, and I hope you enjoyed this video. Have a good one.